Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. We're here to discuss today tax extension filed, how you can still open a solo 401k and make 2024 contributions. Let's first get started with some housekeeping. We'll field a few of these questions or at least these questions that have been teed up here. If you have more questions, please don't hesitate to chat those over. If you are on YouTube, you can use the chat function or the other platforms like LinkedIn or StreamYard or Twitter. So as always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So we're definitely going to spend some time on the topic of how you can still open a solo 401k and make 2024 contributions. But we also like to just field questions that folks have. So we don't want to make you wait. So we'll just go ahead and field some of these questions that have been stacked up. So I have questions about 1099-R. Who receives the 1099-R? Me, of course, since I withdrew the funds and paid the taxes. Also transferred $100,000 to an IRA. So that too, right, but paid no taxes. What about funds I sent to Schwab account attached to my solo 401k? So no, when you move money to an account in the name of the solo 401k, unless it's an in-plan conversion, like a pre-tax to Roth transfer, when you're taking money, for example, from your pre-tax solo 401k account to your Roth solo 401k account, or it could be an after-tax to Roth solo 401k transfer, which is also inside the plan, going from the after-tax solo 401k account to the Roth solo 401k account. Unless it's one of those in-plan conversions, that's not going to be a reportable event. So 1099-Rs are required when you do an in-plan conversion, like pre-tax to Roth, after-tax to Roth, or you transfer money out of the plan. So when you transfer money, for example, from a 401k to an IRA, that requires a 1099-R. Or if you take a taxable distribution, that requires a 1099-R. But just say making contributions or moving money from, say, a bank account for the solo 401k to a brokerage account for the same solo 401k, those don't require a 1099-R. Hopefully that helps. Secondly, I think I need a 1099-R to be filed with the IRS by January 31st. No. So there's it needs to be filed by March 31st because we file it electronically. So there's a longer time to file it. So now customers, we prepare the 1099-R as an optional free service for customers who provide us the information in a timely fashion. So what that means is they're typically providing the information, say now, for transactions that occurred in 2025. Then we add them to our queue and we prepare the 1099-R by the following February 2026. At the end of 2024, I did a voluntary after-tax contribution that was rolled into the Roth solo 401k at Fidelity. Prior to the deadline, I tried to file using your site, but was not able to, as it showed that it was the 2025 tax year, not 2024. Yeah, so we'll follow up with you after to see. So as I mentioned, we prepare it as an optional free service for customers that provide it in a timely fashion. So certainly providing information about transactions in 2024 here now would not be in a timely fashion. It's usually done by the end of the year, for example. But let me pull up your email and we'll follow up with you. Let me just flag it here. 1 second, please. Okay. I got your email. All right, next one. Thanks for participating. From what I understand, I can use my Roth account on my solo 401k to invest in a startup business as long as I don't take an active role in the business. Is that correct? Well, yes, you have one of the threshold issue So first of all, yes, our plan generally allows for investing in alternative investments, which could include a startup business. Now, the first issue to consider is whether it's a prohibited transaction. So a solo 401k owner, for example, can't invest in their own business. In simple terms, they can't be on both sides of the table. They also can't personally benefit, right? So if that's the solo 401k owners for their self-employed business, if that's their primary customer that their self-employed business is doing business with, then invest in their solo 401k funds and not third-party business. Even if they don't technically own part of that business, they're arguably going to personally benefit because they're one of their top customers for their self-employed business. So it needs to be a totally passive investment. So right where the solo 401k owner is not otherwise involved, either as an owner or as an employee or as a contractor, et cetera. And then it needs to be documented as an investment in the name of the solo 401k. So if it's an equity investment, it would be documented under the name of the plan. Or if it's a debt investment, the loan would be payable back to the name of the plan. So now, if it's an equity investment in a business, it cannot be an S Corp, because under the S Corp rules, the owner of an S Corp cannot include a solo 401k. So it's either going to be a partnership or it's going to be a C Corp. So if it's a partnership, that means it's a pass-through entity. So if you have an equity investment in a pass-through entity where that entity itself is an active business providing goods or services, then the income attributable to that equity investment that flows back to the solo 401k is going to generally be subject to unrelated business income tax. That doesn't make the investment prohibited, but that just means that there's not going to be as much returns on the investment, because now the solo 401k is going to have to pay tax on some of that income and have to file a 990T, a tax return, to pay that tax. What's going to depend on the facts and circumstances as far as what constitutes an active role. But I mean, generally speaking, it's going to be things that have to do with operating the business. Yes, the role would need to be limited to what a passive investor would typically be limited to, right? So just like any passive investor, there's going to be access to certain information, right, about what's going on in that business so they can monitor your investment. So now you wouldn't necessarily have control over the management or the operations of the business. If the investors do have seats on the board, that's acceptable, but the solo 401k owner could not be compensated for that board seat. Again, you can't personally benefit. When making a contribution via check to Schwab, who do I make the check out to? So generally speaking, for tracking purposes, you want the check to be made payable to the name of the plan. Now, Schwab may say we wanted you to make it payable to Schwab. Ultimately, that is acceptable, but it's going to be best if it's Schwab for the benefit of the name of the plan, right? So Schwab FBO for the benefit of the name of the plan, or if you put the name of the plan in the memo section of the check, that would also be acceptable. So if it's going to be a passive investment, then the expectation is that it's a minority investment, right? If it's a majority investment, that's going to suggest that the 401k's got operating control. And again, you cannot operate a business through your 401k. I'm not sure the 2024, I'm not sure what that pertains to. I'm looking to roll my 401k plan into my solo 401k as I own a business. Can I take a loan out against the solo 401k to pay off personal high interest credit card debt? Yes, our plan definitely allows for solo 401k loans. You can borrow up to 50% of the balance, not to exceed $50,000. It needs to be documented as a loan, which we handle the documentation requirements as part of our service for no additional charge. Paid back in monthly or quarterly payments, equal payments of principal and interest, with those payments spread over a 5-year term. Absolutely, the interest will most certainly be paid back to the solo 401k. Or it can be a partnership, but again, it just may trigger the unrelated business income tax, but it wouldn't be prohibited. Okay, let's take a look. It's the question that we started out with at the beginning, which is tax extension filed, how you can still open a solo 401k and make 2024 contributions. So just to lay the groundwork, right? A solo 401k is a retirement plan for self-employed individuals. So you need to be self-employed with no full-time W-2 employees. So think like an independent contractor, solo practicing professional. Ultimately, the key is that you're reporting earned self-employment income on your taxes. So for example, income reported on Schedule C, for example, for a business taxed as a sole proprietorship, or if your business is taxed as an S Corp, receiving W-2 wages from the S Corp, that's going to be earned self-employment income. So you got to have that earned self-employment income to demonstrate that you're self-employed. There's no minimum amount of earned self-employment income that you would need to be eligible to set up a plan. So as long as you have that earned self-employment income and it's consistent, right? It's not just a one-time event. There's no full-time W-2 employees working for your business, then you'd be eligible to set up a solo 401k. So that's the foundation of what it takes to set up a solo 401k. Now the question becomes, okay, well, here I am in 2025, and I want to be able to contribute for 2024. Can I do that? So the answer is yes, provided that you filed an extension for your self-employed business tax return for 2024. So if your business is taxed as a sole proprietorship, right? Let's say that you don't have an entity, you just are operating as an unincorporated business, as a sole proprietorship. That means that you report your earned self-employment income on Schedule C of your 1040. So effectively, your 1040 is your self-employed business tax return. So if you filed an extension for your 2024 1040 and you want to make contributions for 2024, you could still set up a plan here in 2025 and make employer and or voluntary after-tax contributions for 2024. And you'd be able to set up the plan and make those contributions. You just have to make those contributions by the extended tax return deadline. So October 15th, if you file the timely extension for your 2024 1040. Now, if your business is taxed in some other fashion, let's say your business is taxed as an S corporation, or it's taxed as a partnership. Well, in that case, you would have to set up the plan and make those contributions by the business tax return extended deadline. So, for example, the tax return deadline for a partnership as well as an S Corp was March 17th of this year. So if you filed the timely extension for your S Corp return or your partnership return, the 1065, that would have extended the deadline for that business tax return until September 15th of this year. So that means you could still set up a plan here in 2025, a new plan, and make employer and or voluntary after-tax contributions for 2024 by September 15th. In the case of an S Corp or a partnership, and again, as long as you file that timely extension. And then lastly, if your business is taxed as a C corporation, if you filed an extension for that 1120, that C corporation tax return, and you did it in a timely fashion, that would give you until October 15th of this year to file that C corp tax return. So that means that you could still set up a solo 401k for 2025 and make employer and or voluntary after-tax contributions for 2024 by October 15th. So you can see the pattern, right? It's too late at this point to be able to make employee contributions for 2024 if you hadn't set up a plan by the end of last year. But there's still time if you filed an extension for your self-employed business tax return to set up a plan here in 2025 and at least make employer and or voluntary after-tax contributions for 2024 by the extended tax return deadline. So that deadline is going to depend on how the self-employed business is taxed. All right, great. So now let's go back to the questions that are being chatted up. Appreciate you bringing the questions. And I'll just, before we jump to these questions, if you're on YouTube or if you're on any of the other platforms like LinkedIn or Twitter, if you like, that'll really help us get the word out to other self-employed individuals like you. So if you like the video or the stream or share it, etc., that'll help just get the word out. So that'd be great if you could do that. Subscribe to the channels. That'll get you notifications of when we go live. So with the tax deadline, we put a pause on the daily live streams, but we'll be resuming them next week. So we go live twice per day, once at 10 a.m. in the morning. We go live at 10 a.m. Pacific, 1 p.m. Eastern. Then we come back in the afternoon at 1 p.m. Pacific, 4 p.m. Eastern. So you can come in, you can ask questions. We'd like to bring a topic like we did today with the tax extension topic. So we really appreciate the chance to discuss these topics. So thank you so much. Thanks in advance for liking and subscribing. So the startup will have two other owners. My solo 401k would be a 40% owner. The other two partners would be 30% each. That would still give me the majority control. No, I would say if you have more than 50% would be the threshold, because obviously the other two then could operate the business and the 401k is just a passive investor. That would be acceptable. Again, if it's a passive investment, the other two have operating control and the 401k is just a passive investor. I would say if it's more than 50%, it would be is what could draw this scrutiny or challenge to the notion that it's a passive investor. Okay, we'll give it a minute to see if there's any more questions. Thanks so much for the thumbs up. We do appreciate that. Please continue to engage. We have a community with over 30,000 members. It's totally free to join. All are welcome. We have the industry's first AI at solo401k.ai. Again, totally free. It's a great way to quickly find answers to questions and resources. Again, we'll be resuming the daily live streams starting next week now that we're past the tax deadline. So thank you so much for joining today. We look forward to the next time, and we'll take it from there. Thank you so much.